Hey, good morning, it's Owen Bigland. This is the Inside Edge video blog. Time for one of my short little rants here. I like to do these every couple of months, keeping the media in check and some of the headlines I see. And I can tell you, if I had to react to all the stuff that I see on the media, just the false and dumb information that they throw out there, headline grabbers, I'd be shooting video blogs 7 days a week for 10 hours trying to cover some of this stuff. I've said it before, my wife won't allow me to watch much of the news anymore, and I don't really take in a lot of the mainstream media. I kind of filter in who I listen to through some Twitter feeds and through some other news networks that I follow, some feeds that I get, as opposed to just watching the general news. And I suggest a lot of people do the same thing. Target the reliable sources and the information that you think is valuable and tune out a lot of the rest. And a lot of these media outlets, they're good and bad. Sometimes they'll give you lots of good information. Take, for instance, BNN, Business Network. I follow a number of their shows on there, especially their Market Call Tonight, but I only follow it when they have certain guests that I keep track of when they're on there, some of their analysts. And probably about 20% of the guys I actually pay attention to. The other 80% just don't meet my investing criteria, thus I'm not really interested in what their opinions are. But let me cover a couple of things here on the media and some of the headlines that have been in the paper here of late. BNN and a lot of the media outlets have been running stories for a long time on the out of control, ultra hot Toronto and Vancouver real estate market. And a lot of these guys they interview, including the one guy, this short seller, Mark Cohodes is his name. People should do a little homework on this guy and have a look at this guy's background. That's all I'll say. But he's a short seller. He wants to see Vancouver and Toronto real estate crash. But him and a number of other people that are on these outlets and whoever will listen to them, they'll talk about one of the main drivers of the runaway prices is cheap and easy credit. Now, I blogged about this many times before. Cheap mortgage rates, cheap financing is definitely one of the main drivers. But easy credit, as a lot of these guys would have you believe, is absolutely false. It's completely made up. And they will then go on to try and compare the Canadian market, especially Toronto and Vancouver, to the subprime situation they had in the subsequent housing crash they had in the United States, and how the two are directly correlated and very similar. And I just have to say they're not similar in any way, shape, or form, other than the prices have been going up. Other than that, there is very little correlation between what's happening in Vancouver as opposed to what happened in the United States. Now, cheap money, low mortgage rates are definitely one of the prime drivers. But anybody who has applied for a mortgage lately, and I'd like to hear the feedback from some of my viewers here, who owns a home and went through the pre-approval process and the down payment process to get qualified, will attest that it is nothing like what was going on in the United States and never will be. It is extremely difficult in Canada to get a mortgage. Please, I'd like to hear your comments on the hoops you had to go through. I've been in real estate, in owning real estate and investing in real estate for 30 years. I've got long-term connections at all the major banks, mortgage lenders. So I've got a pretty good track record, a pretty good history with them. And even I'm amazed sometimes when I go to restructure some of my holdings or look to add another property, how many hoops I have to go through. And I'm putting down conventional mortgages, 20-25% down payments. So anyone that's doing high ratio in Canada can attest that it is incredibly difficult to get qualified for a mortgage these days. And that's just the way the Canadian banking system works, unlike the United States back during their housing crisis, where if you had a pulse, they would lend you money for a home. You need $50,000 for a new car, we'll tack that on to the mortgage as well. You were actually able to borrow 105 or 110% of the purchase price. Go into the Royal Bank or TD and see if you can do that here. So whenever I keep seeing this, that people are saying that it's driven by cheap money, that's correct, and easy credit. That's not correct. it is very difficult to access this cheap money. If you can, take advantage of it. I've blogged about it many times before. I'm sure doing it, but I also leave myself a buffer for when interest rates do start to go up. I can still cover the mortgage payment, or if they really start to spike, I can put some lump sums down on that mortgage to get my payments back down to where my income is coming in from my tenants. And you want to do the same thing. But it gripes me to no end when they talk about comparing the Canadian market to the US market and how it's easy credit here and anyone can walk into a bank and get a mortgage. That is simply not the case. Very difficult. I can tell you that the 5% down, I'll get many people that will call me and say, "Oh, and I want you to help me find a condo. My budget is $500,000. I usually will ask them, "Are you pre-approved?" A lot of times they'll say no, but not to worry. I've got $25,000 or $30,000 for the down payment, so I've got enough. And I have to tell them, you might have enough, but the first step is you've got to go into the bank and see if you can qualify for that 5% down. I'm here to tell you now that I think the 5% is all but dead for everybody except maybe the odd outlier who is earning $200,000 or $300,000 a year, doesn't have any debts, and wants to buy a $500,000 condo. For everybody else, once you go into the bank, you'll quickly realize that. They're going to want 10, 15, they might even want a conventional mortgage now. It is very difficult, and the mortgage requirements, as I've blogged about many times before over the years, has been getting tighter and tighter and tighter and tighter. More down payments, the banks want more skin in the game from you and less risk. And it's going to continue to go that way. So very difficult to put 5% down. So that is one of the things that I wanted people to realize here, that yes, cheap money, low interest rates are one of the key drivers for our market here, but it is definitely not easy money, and there's a huge difference. Now, as I speak, we're starting to see some new reports coming out, which it always does. They like to grab you with these headlines, that it's cheap and easy credit that's driving this market, and people's consumer debt levels are going through the roof, and the affordability and everything else. Now, of course, we get the yin to the yang. Now, maybe it's not as bad as we think. I've seen a few articles now that are debunking what a lot of these earlier people were saying about easy credit and people overextending themselves, and there isn't any similarities between Canada and the United States. The other thing that I will say too, one other thing while we're on the topic of media and BNN lately has also talked a number of times about the foreign buyers tax in BC, and which is now in Ontario, and how it has cooled the market dramatically as far as sales go. And again, I've blogged about this so many times before. Sales don't mean anything. It's a useless stat unless it's compared with listings. The sales to active listings ratio. When somebody says that sales have dropped 10% or 15% from this time last year, what does it mean? It doesn't mean anything unless you look at it in connection with what the listings are. And I've been saying for 2 years here that sales have been dropping, but prices have actually continued to go up. The sales ratio doesn't mean anything. All it means is that people are holding tight to their properties and they don't want to sell, which makes the matter worse because we've still got 3 or 4 buyers for every unit. Inventory is at ultra low levels, and that's what causes prices to continue to go up. So when somebody says sales have dropped 10%, well, what is that in relationship to the listings? What have those been doing? Well, those have been going down too. Then it's a rub, it's a wash. And actually you'll start to see prices continue to go up when that happens. The other thing I want to point out too, part of the reason why we've got low inventory goes back to what I'm talking about, where getting credit and getting mortgages in this market, in Canada, in Vancouver in particular, is very, very difficult. And this is part of the reason why we have our prices doing what they're doing. Because people cannot move up in this market. I did a blog, several, talking about how sellers do not want to become buyers. Somebody does not want to sell the home and then have to wade back into this beast of a market and try and buy something else and get into bidding wars. The other reason why they don't want to do that is because they can't. The mortgage rules have been tightened so much over the last 3 years. I think we've had something like 6 or 7 different tightenings as far as down payment requirements, income requirements. They just keep pumping out more and more. That the guy who was able to buy that 1-bedroom condo 5 years ago, based off his current income, cannot qualify for that mortgage today based off the new tightening of the mortgage rules. So this all goes full circle here. Yeah, interest rates are cheap. It's cheap money, and take advantage of it if you can qualify. But qualifying for it is very difficult, extremely difficult. And it's one of the reasons why we have such low inventory, because people can't move up in this market. They can't qualify anymore, which just perpetuates the problem and the prices. So a lot of people miss a lot of this. You wouldn't know it. I'll give you another example here, just from the front lines. And I blogged about this too. My typical seller 5-6 years ago was a guy or a couple that had bought a 1-bedroom apartment and now wanted to move up to a 2-bedroom. Or they had a 2-bedroom, wanted to move to a townhouse or move up to a detached home. Moving up the market made up a big percentage of my selling clients. Today, that makes up a much smaller portion of my selling clients. I've got lots of past clients that would love to upgrade, move up. They need more space, but they can't. A, there's nothing available. B, they don't want to get into a bidding war with 10 other parties. Once they sell their place, they got to buy something. And C, with the mortgage requirements now, they can't even qualify for the higher priced or the larger unit anymore. They've tightened the requirements so much they can't qualify. So it leads to what we have: people holding tight, not wanting to sell. They can't move up for a number of reasons, like I just said. And you get what we have here. We got an ultra hot market, more buyers than there are sellers, and the prices continue to roll. Eventually it'll come to an end, folks. Like I've always said, interest rates will go up more. We might get some new unannounced tax or another restriction, put some other brakes on it. Who knows with the new government we've got in place now, what they're going to do. Unpredictable at best. So we'll see what happens. But today, I still do have some sellers that are moving up. But a lot of my sellers are things like estate sales, power of attorney, trustees. A lot of my sellers are moving out of the province entirely. They're selling their home here. They're going to move to Ontario or PEI or over to Victoria or to the interior, Kamloops, Kelowna, Lytton, wherever. So I get a lot more of those type, or they're just getting out of the market altogether. They're going to sell. They're now in retirement age. They're going to spend some time down in the US and maybe rent a place here part-time. So far less people moving up the market, more estate sales people moving out of the market. And again, it all perpetuates the problem. Less inventory, high demand, cheap interest rates for sure, but it's tougher to qualify for a mortgage. And you get what we get right now, which is record-setting prices week over week. Eventually it'll change, but that's the story from the front lines here, that a lot of people, a lot of the news outlets, because they don't sell real estate, they're not in the front line or in the trenches, they don't see this stuff. I wish they did. Some of them are starting to report a bit more on it now, but keep these things in mind. This is one of the reasons why we've got the market we've got. We've got cheap money out there, but it's not easy money like some of the media would let you believe. And I'd like to hear your comments on some of the people that have bought a home in the last year or 2 years, how difficult it was to get pre-approved for that mortgage and the down payment requirements that the banks required. 5% is dead. You might be able to qualify for it, but better talk to your bank first. You better come up with the 10 or 15. That's probably what you're going to need now. I'm Owen Bigland. As always, thanks for watching. If you haven't subscribed to my YouTube channel, please do. See you next week.